Bitcoin dipped to 78K this morning. Like Jason Tatum getting crossed by Asar Thompson, Bitcoiners are down bad right now, and their portfolio gains are flashing right before their eyes. But it's not just Bitcoin, it's the entire market, as nearly every asset is well off of its all-time high. And I'm not going to say that I told you so, but I predicted that Bitcoin would crash to this price on December 31st of last year. When the money continues to inflate, you need assets that grow faster than the rate of inflation in the money. And there seems to be this thing that's working in that favor, this magic internet money thing called Bitcoin. When money is printed, Bitcoin gains disproportionately. In fact, Bitcoin moves in the direction of global liquidity 83% of the time, which is the most of any asset class in the world. And if you believe that money will continue to get printed forever, well, then Bitcoin seems like a pretty good investment. But right now, global M2 is contracting. And based on this chart from Joe Consorti, with a 70-day lag in M2, Bitcoin seems poised to find levels between the high 70K and 80K range. And this presents a generational opportunity. Today, I'm going to walk through what the market is telling us about where we are currently. We'll look at who's selling Bitcoin and who isn't. We'll look at what recession indicators are telling us about the 10-year and 2-year yield curve spread, which has preceded every major recession. We'll look at how bearish the markets are in general and what the Fed's response will be and how this relates to Bitcoin. My thesis hasn't changed. This is Dante Cook with Bitcoin Simply. Let's go. Okay, so on December 31st, I created a video titled Why Bitcoin Will Crash to 80K, and no one really listened, or they put really angry comments in the video. Well, why did I predict that back then? Well, because Bitcoin is really sensitive to global liquidity. In fact, it moves along with global liquidity 83% of the time. Bitcoin's price typically lags liquidity by about 70 days. But positive news for Bitcoiners, liquidity is on the rise. So by mid-April or early May, Bitcoin looks to rally and rally towards all-time highs. You can stamp this and said that I said it here. This is a testament to this great chart put out by Joe Consorti, which continues to be right and right again. My long-term thesis for Bitcoin hasn't changed because fiat currencies priced in Bitcoin are all going to zero.
Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise.
But for now, today, we want to understand why Bitcoin is crashing and who is selling. On the whole, it's the new Bitcoiners and the short-term hodlers who are selling. In this great chart from Minger, you can see that 74% of the recent sales are coming from short-term holders, or people that have bought Bitcoin in the last month. This is confirmed when you do a deeper dive into the analytics as well. About 20% of the supply of short-term hodlers are in the profit, which means about 80% of all the Bitcoin bought by people who are just entering the market is in the red. And when you combine this with the massive inflows that we've seen from ETF purchasers, you see that it's probably the people that are just getting into the game, the institutions, the financial advisors who aren't ready and used to the volatility of Bitcoin, who are selling. When you go to the on-chain metrics, you notice that there is a large amount of purchases that have happened in Bitcoin that are between the 90K and 105K mark. You see this massive gap between 75K and 85K. This is the window of price discovery that we're in now, because most of the people that bought before then aren't selling. And this presents a great opportunity. Let's look back at this clip that Michael Saylor put out about a year ago from today, talking about why there's no structural changes and reasons why Bitcoin should sell off in the long term. And I agree with him.
As for your second question, the halving, look, the selling in the market for the past month has been primarily bankruptcy estates that are liquidating GBTC at FTX or Genesis or the like. Once they got done rebalancing, the natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're writing it the other direction. and the protocol's working to everybody's benefit.
The fear and foolishness of others is the opportunity for the patient investor. When others sell, we hodl. Speaking of hodling, let's get to our first sponsor, Ledn, the leader in Bitcoin-backed lending, who just recently opened up in the state of New York and has lent out over $7 billion worth of Bitcoin to tens of thousands of customers and have never lost a single cent or sat of customer money. They've been the leaders in Bitcoin-backed lending since 2018, allowing people to unlock liquidity in their Bitcoin without selling their Bitcoin. The process is simple. You post 2 times the amount of collateral of the loan that you want to get. If you want $5,000 US, you post $10,000 in Bitcoin. It's a pretty simple model. And it's pretty simple to see whether you qualify for a loan. The process takes just about 2 minutes, and you can have liquidity in your local currency in your account in less than 24 hours. Go to ledn.io/borrowing in order to get started with your Bitcoin-backed loan today. That's ledn.io/borrowing. And our other sponsor is the people that help you to protect your generational wealth the right way, and that is the Bitcoin way. They provide you with members from their team who will walk you through proper 100% self-custody by helping you remove your Bitcoin from exchanges and remove all third-party and counterparty risk. Make sure that you're not only buying Bitcoin, like a great opportunity that's presented right now, but you're also taking self-custody of your Bitcoin, privately, confidently, and securely. You should schedule a 30-minute free consultation with a member of their team by going to thebitcoinway.com/simplybitcoin. Their team will walk you through exactly how to do this so that you can make sure that you're holding the best asset in the world the proper way. Back to the show. The fear that we're seeing in the market right now is actually unprecedented. Not only is this the 7th highest, most bearish sentiment that we've seen of all time, it doesn't adequately represent the amount of drawdown that we've seen. We're seeing the most bearishness for the least amount of drawdown. We're only 3% off of all-time highs in the S&P 500, yet we're seeing the same amount of bearishness that we've seen during the great financial crisis and COVID. This presents opportunities for prudent investors. Like some famous investors said, you buy when there's blood on the streets. And that has proven to be true time and time again, because when you look at the data, when the market is typically this bearish, there's good returns 6, 9 months, and a year afterwards. And this is just the S&P 500. This analysis rings even more true for assets like Bitcoin. And people are still bearish right now because the Ides of March aren't just political anymore. They're geopolitical. Remember all of those things about tariffs that Trump said before? Well, they're now coming to roost. Trump announced that there would be potentially tariffs on Mexico and Canada due to the drug war and drug trafficking coming across those borders. Well, those hit March 4th. Trump announced tariffs going on the auto sector in the EU and broader tariffs in general on the EU at 25%. Well, those are coming up next week. Oh yeah, and the 10% additional tariffs that he announced on the already 10% tariffs on China, well, those are coming due next week, March 4th. So the market is not only bracing for these tariffs going into effect, but potential retaliation coming back from other countries. And other economic data doesn't look so rosy as well, which may be contributing, like pending U.S. home sales falling to an all-time low, or credit card delinquencies hitting $46 billion, another all-time high. Freddie Mac delinquencies on multifamily properties are hitting an all-time high. And most importantly, jobs. Jobs are not looking rosy. Most people have seemed to forgot about the January jobs report that had revised down jobs by almost 600,000 jobs and the lowest amount of hours worked that we've seen since the great financial crisis in America at about 34 hours. Well, when most people lose their full-time jobs, they try to make up the hours by getting a part-time job. And so when you see the aggregate number of hours come down, you know that the market's in trouble. And one of the 2 mandates of the Fed, other than price stability, is job and employment. So when the job market and the employment market looks bad, the Fed steps in. And you know what's crazy is people are always surprised to see not only how much the Fed cuts, but how fast the Fed cuts when they do cut. And the chart looks almost the same every single time. If history doesn't repeat, but it rhymes, it looks like we're going to see some pretty steep cuts from the Fed when they do, in fact, start to cut rates. And I believe that the most major theory in Bitcoin right now, the diminishing return theory, is going to be put to test when the Fed starts to cut rates again. Let's listen to Bitcoin OG Adam Back talk about the theory of diminishing returns and where he thinks we are in the cycle.
I think, one theory which is going to be tested this cycle is the diminishing return theory. And so people are drawing extrapolations from the last bull market being a bit muted, but I think there are lots of overhangs on that, the COVID, supply chain, all the economic effects around that, plus, the DeFi failures and so on. And I think the other thing is, technology typically goes through an S curve. And I think we're still early. We're in the industry, so we feel we're at late stage, but it's actually still early. And so I think there is scope for kind of more rapid adoption phase. And if that happens, this kind of inferred slowdown may be reversed. So, if we see this cycle having a much higher cycle to cycle increase than prior cycles, that would kind of invalidate that, possibly invalidate the power law or even stock to flow. So, I think a, sort of 500,000 to 1 million cycle top in this cycle is within bounds. So
you think that this cycle top could be between 500,000 and 1 million?
Yeah.
That's a pretty high number.
Yeah.
Do you think that is predicated on the U.S. having to buy Bitcoin for the strategic reserve, or that could happen without
I think if that happens, all bets are off, because you get kind of, country level. I think other countries have to react if and when they see that, right?
Talk me through this more. Hold on. This is a big number. 500K to 1 million. I don't think you're saying it's going to do that. I think you're saying it's possible. Right. What are the assumptions that go into us driving a price that high?
Well, I mean, there's a lot of things going on at the moment, right? In terms of ongoing buying demand. So the ETFs have absorbed about 2 times the mine supply since launch. MicroStrategy and the other treasury companies absorbed another 2 times the supply. There are active traders absorbing another time. So, there's retail dollar cost averaging. So there's somewhere between like 5 and 7 times the mine supply being bought. And we're in some kind of, short-term consolidation where short-term investors or medium-term investors are taking profit. But I think, they can only sell once they're gone. Then there's a kind of supply shock situation. And you get a lot of reflexivity in Bitcoin markets where, the price is up because the price is up. It's how we get kind of exuberance and then the blow off top. And it's also still fairly early in the cycle in terms of, 6 months after the halving to 18 months, 2 years after for the cycle. So there's a lot of time to run.
This happens almost every single time. Short-term hodlers sell early. They get paper hands, while the long-term hodlers have diamond hands. They get bored in the sideways markets and they miss out on the violent upside rips in Bitcoin. And they tend to pile in after it's already started and there's a new level of price discovery. We still have a long way to go. And that's why I'm not panicking right now. And why I won't panic in the future. We still have our most prominent politicians in Washington go to PubKey and pay with cash. Major institutions are still piling in. Goldman Sachs, Millennium, the Abu Dhabi Sovereign Wealth Fund, the state of Wisconsin, and Paul Tudor Jones are just some of the big institutional players that are piling into Bitcoin. Paul Tudor Jones has the largest position of his overall portfolio at $248 million in Bitcoin right now. And the 9th largest economy in the world in Texas just passed the SB 21 revisions so that it can go to the Senate floor for voting.
Campbell moves that Senate Bill 21 do not pass, but that the substitute adopted in lieu thereof do pass and be printed. The clerk will please call the roll.
Senator Blanco? Aye. Senator Campbell? Aye. Senator Creighton?
Aye.
Senator Johnson? Aye. Senator Kolkhorst? Aye. Senator Menendez? Senator Middleton? Aye. Senator Nichols? Dean Zaffarini? Aye. Senator King?
Aye.
Senator Schwartner?
Aye.
Being 9 ayes and 0 nays, the committee substitute to Senate Bill 21 is favorably reported.
You're not bullish enough. Stay calm, stack on. And as I always say, you don't need to look at 50 different charts to understand what's going on in the world and the market. Just look at liquidity. Bitcoin is the fastest horse in the race when it comes to liquidity. And when that comes on, it's game on. If you want to continue to learn more about Bitcoin and grow in your education as this market chops down or sideways, or what some people call chopsolidation, well, a great way to level up in your education is by going down to Dallas, Texas from April 3rd through April 6th to the BitBlockBoom conference. Hear from some of your favorite speakers in Bitcoin like Parker Lewis, Guy Swan, Marty Bent, Bob Burnett, and me. And also learn how to buy Bitcoin for your first time, remove it from exchanges, mine Bitcoin at home, and meet some of your favorite Bitcoiners in real life at things like the Saturday Casino Night or other side parties and events. I'm super excited to meet you guys down in Dallas, Texas. And if you are going down to Dallas, Texas, I hope that you would use the promo code BBB25 to get $100 off your all-inclusive ticket. That's promo code BBB25 at BitBlockBoom.com. This video today was not sugar highs. This was about the meat and potatoes of what's actually happening in the economy and what's actually happening in the markets. If you enjoyed this content, like, share, subscribe to this channel, And as always, this is Dante Cook with Bitcoin Simply. Happy stacking.